This video is brought to you by EnHouse M&A.
Today, we're diving deep into the tech titan that has taken the world by storm, Nvidia. From powering groundbreaking AI to enabling self-driving cars, Nvidia's processors have become the driving force behind some of the most cutting-edge innovations of our time. This graphics chip maker has transformed itself into an AI juggernaut, with its GPUs being the processors of choice for training neural networks and running complex AI workloads. But Nvidia's ambitions extend far beyond just hardware. The company's goal is to build and support an AI ecosystem. To this end, Nvidia has already secured an extensive partnership network spanning technology, automotive, healthcare, industrial, and entertainment sectors. But did you know that Nvidia has been increasing its strategic investments over the years as well? Today, we'll unveil Nvidia's M&A strategy using the framework from EnHouse M&A. We'll explore how these moves may further help cement Nvidia's position as a tech titan and a pioneer in emerging technologies reshaping our world. Stick around until the end because we'll also discuss what might be Nvidia's next strategic direction based on clues from its M&A activities. You won't want to miss it. Let's first take a look at Nvidia's investment activities in the last 5 years. We see that Nvidia has been increasing the number of investments year over year. If we take a closer look at the more recent deals, we notice that most investments are participation in fundraising rounds concentrated in 4 broad areas: AI applications, computing, robotics, and healthcare. From these investments, what can we learn about Nvidia's M&A strategy? How are they planning for their next development? Let's analyze it using our framework: strategic fit, financial goals, feasibility, and structuring. You can check out our M&A framework explanation in another video, with the link provided in the description below. Strategic fit. Nvidia is already the world's leading GPU company with a global sales network. It's clear they don't need M&A to increase market share or expand geographical presence. Instead, M&A is a key tool for Nvidia to continue acquiring new complementary capabilities. In fact, in Nvidia's latest company presentation, they stated they're making strategic investments to grow talent and build up their platform reach and ecosystem. Starting from its core data center-related business, we see Nvidia has historically invested in cloud-related companies. Just 4 months ago, in November 2023, Nvidia invested in the cloud data analytics company Databricks. Back in 2020 and 2022, Nvidia has also made control acquisitions of companies with various cloud storage and network capabilities, such as Mellanox, Cumulus Networks, SwiftStack, and Exelero. On top of in-house R&D, Nvidia leverages M&A to combine the top talents and technologies on the market to create best-in-class data center solutions. To further build out Nvidia's platform and ecosystem, Nvidia has also been relentlessly making minority investments in its customers, focusing on applications of Nvidia products. This covers a wide range of areas, from AI software and robotics to healthcare and automotive sectors. For example, we've seen Nvidia invest in AI writing and research assistant tool Essential AI Labs, industrial automation robotics company Figure AI, generative biotech researcher Superluminal Medicines, and automotive verification solution provider Fortelix. Instead of building out all these capabilities in-house, through minority investments, Nvidia can learn about their customers' needs and continue investing in R&D to stay at the forefront of technology. Financial goals. These days, when Nvidia considers M&A opportunities, they're likely not thinking about how these target companies will contribute directly to their consolidated revenue growth or margin improvement. By recruiting more companies to use its platform, Nvidia can build an ecosystem that is strong and sustainable. Coupled with the outstanding performance of its GPU architecture, Nvidia has made its products almost irreplaceable in today's AI revolution. This allows Nvidia to continue charging premium prices with the growing demand for its products, and as a result, earn an outsized margin. For the fiscal year ending January 2024, Nvidia's gross margin achieved a stellar 74%. Feasibility. When evaluating potential investments in downstream customers, Nvidia has adopted the minority investment approach. Nvidia has no intention of controlling these companies and would like to build deeper relationships through capital alliances. Additionally, considering that many startup companies are still at pre-profit stages, they would constantly need additional fundraising to sustain business operations. Therefore, these deals are not only feasible, but also win-win situations for both Nvidia and the investee companies. Historically, Nvidia has also made some control transactions. We mentioned the cloud storage and network business earlier. The largest one was Mellanox, which Nvidia acquired through a public tender offer in 2020 for a total consideration of about $7 billion. In the same year, Nvidia signed a $40 billion agreement with SoftBank to acquire Arm, hoping to drive innovation by combining Nvidia's leadership in AI with Arm's vast computing ecosystem. However, the deal was ultimately not feasible. The global chip shortage following COVID led to scrutiny by antitrust authorities worldwide, including the US, UK, and the European Union. As a result, Nvidia and SoftBank announced the termination of the deal in February 2022. Structuring. Starting a few years ago, Nvidia has been increasing the number of its minority transactions, notably because it fits well with Nvidia's strategy to build out its platform, facilitates meeting Nvidia's overall financial goals, and is feasible. The area of AI application is broad, and thus the number of reach becomes more important than revenue consolidation. With minority investments, Nvidia can enjoy being at the center of the ecosystem and avoid potential regulatory challenges like those faced in the Arm transaction. Additionally, it's worth mentioning that Nvidia also utilizes business partnerships to strengthen its ecosystem. Notable partners include the familiar Google, Microsoft, Oracle, Hitachi, Amgen, and others. We mentioned in the beginning that we would talk about Nvidia's next move. What is it? After the Arm transaction, perhaps we won't see Nvidia doing another major acquisition in the near term. But it did make a couple of smaller acquisitions. Notably, in 2023, Nvidia acquired OmniML, a startup that compresses AI models so the computing can be run on edge devices. We all know that present-day AI training requires such high computing power that it can only be run on the cloud. But for AI to be more prevalent, it will eventually need to operate on edge devices, such as cars, robots, mobile devices, and smart cameras. From a leader in cloud AI computing, Nvidia has also been preparing for the next technology shift. Isn't it just exciting to witness how AI technology is evolving? If you enjoyed our content today, please click the like button and subscribe to our channel so you won't miss our next video. EnHouse is a professional M&A training and coaching firm aiming to enable companies to establish in-house M&A capabilities, regardless of their size or current team structure. We have also recently released an ebook called the EnHouse M&A Handbook, which is free to download. You can find the link to download it on our YouTube description page. Until next time.